Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start unit number 2 in financial institutions and markets. Already first unit I have completed 4 videos covering the financial system. What is the meaning of the term financial system? What are financial markets? What are the different types of financial markets? What are the functions of financial system and the structure of Indian financial system? Then I have explained about financial instruments, financial services, and lastly I have explained about flow of fund matrix, FOF matrix, and what is the importance of FOF matrix, and lastly I have explained the weakness of Indian financial system. All these topics I have covered in unit number 1. Now in unit number 2 I'm going to explain about financial institutions. So if you have not watched the first 4 videos, I suggest you go to the playlist of my channel. Select the subject financial institutions and markets. Be clear about the concept of financial system. Then only you can be able to understand the remaining part of this subject. So before starting the explanation of financial institutions, take the screenshot of the points which I have written on the board. Then I'll explain the meaning of the term financial institutions and what are the functions of financial institutions and what are the features of financial institutions. So first of all, the financial system is dependent on 4 pillars. The 4 pillars of the financial system in any country are: first, financial institutions; secondly, financial markets; thirdly, financial instruments; and lastly, financial services. These 4 are the pillars of financial system in any country. So the success of this financial system depends on these 4 pillars. Now in this unit we are going to understand only on one pillar, that is financial institutions. So first of all I am going to explain you the meaning of the term financial institution. A financial institution is an intermediary between 2 parties. One party is the supplier of funds and one party is the need of the funds. The people who need the funds, who require the funds, is at one place, and the people who provide the funds is the other party. So in between these 2 parties, the supplier of funds and the user of funds, the intermediary is the financial institution. They act as an agent in flowing the funds from the investors to the issuers or the business people who need the funds. Now, intermediary between those who need capital and those who provide capital. There are 2 parties in the market. One is the people who need the capital and the second party who provide the capital from their savings. Example, the people will earn the money. Out of that money, some amount is required for our survival, for food, clothing, shelter, all these needs. We need the funds. Apart from that, the people will save the money. Now this savings has to be invested, then only it will grow, it will give some return. If we just keep our savings idle, we will not get any return. The idle fund will incur cost, it will not give any return. So the savings which we save, that has to be invested. So we are the investors, but we don't know where to invest. Investing is a professional task. Very carefully we have to invest considering our objectives. These intermediaries will help the people in making a prudent decision on investment. So on one hand, they are investors who provide the funds, and on the other hand, there are people who need the funds for running the business, for running the organization. So in between these two people lies intermediary, and those intermediary are called financial institutions. Those who need capital are called issuers, and those who provide the capital, they are called investors. So remember two words, investors and issuers. Those who provide the capital, they are the investors. Those who need the capital, they are called the issuers. Now, financial institutions are intermediaries in the capital market who facilitate the flow of capital from investors to issuers. They are intermediaries because they will help the capital market in the flow of funds. Remember, one of the important factor of production is capital. Without capital, no business can function. So every business requires fund, and there should be some people who should help in flowing the funds from one set of people called investors to another set of people called issuers. So these are the intermediaries in the capital market who help in flow of funds from the investors to the issuers. The financial institution enable the supply of money to the issuers through the transfer of funds in the form of debt and equity. So two types of funds are there, debt fund and equity fund. So both these funds are required by the issuers. So these financial institutions will help the issuer in getting the required fund in the form of debt or in the form of equity. Now, financial institution covers broad range of business operations within the financial services sector. Actually, this financial institution is a part of financial services. Now, these financial institutions play a very important role in the financial services in the form of investment banks, insurance companies, mutual fund or asset management companies, development finance institutions, microfinance institutions, broker, authorized dealers or money changers. All these are collectively called financial institutions. So as the economy grows, new and different forms of financial institutions are formed, and all these are collectively called financial institutions. Best example, insurance companies are there, investment companies are there, mutual funds are there. All these institutions will mobilize the funds from the people and divert the funds for development purpose to the business organization. Now, commercial banks are also financial institutions but are categorized separately due to the varied, unique nature of work. The work of commercial bank is comparatively unique, different one from these organizations. So that's why we discuss it separately, commercial banks. But commercial bank is also one of the financial institution. Now, thus financial institutions are referred to as entities that deals in any type of finance related business. So broadly we can say financial institutions are all the entities which perform the financial services. We cannot categorize that these are the only services provided by financial institutions. No, varied type of services are provided by financial institutions. Due to the dynamic nature of the economy, due to a lot of changes taking place in the economy, so financial institutions' work has also been changed. Varied nature of work they are performing in the financial sector. They play a very important role in extending financial services in the country. Remember, finance is the backbone of any country. The resources cannot be utilized until and unless a country has sufficient capital. Without capital, the resources cannot be used. So these financial institutions will help the country in procuring the required finance. Now, they provide alternative schemes of investment to investors. Now see here, investment is not a simple task. Every investor will have different objectives. Some investors are risk takers, some investors are risk averse, but both are investors. So that's why financial institutions will provide a varied nature of instruments for risk averse investors as well as risk taker investors. The variety of instruments are provided. They mobilize the savings and channelize the same business which needs the fund. So what is the main aim, objective of this financial institution? They will mobilize the savings from large number of people, small savings from large number of people, and channelize those savings to the organizations or businesses which needs funds. That's it. So here I have explained you about the meaning of the term financial institutions. Now, the functions of financial institutions. What are the functions financial institutions will play? First of all, financial intermediation. That means the financial institutions are the intermediary between the investors and the issuers, between the people who provide the funds and the people who need the funds. So the primary role of financial institution is intermediation. They are channels through which small savings of large number of investors could be deployed for large projects requiring huge amount of capital. Now see here. In every country, a huge projects are to be applied. When the projects are huge, it requires huge capital. But no single organization, no single institution will be in a position to provide all the capital. In that case, these financial institutions will act as intermediary in mobilizing the small savings from large population and channelize that mobilized amount for huge project, for big project which requires huge capital. So this is the first function. It acts as an intermediation. Second, risk transference. That means this financial institution will act as a body which transfer the risk from one person to another person. A single person cannot be able to take huge risk. When the risk is transferred or distributed on different people, then the quantum of risk will get reduced. Simple example, if a big risk falls on me, I cannot survive. I cannot afford a huge risk. Whereas a small risk is applied on my head, easily I can bear it. So these financial institutions will transfer the risk among different people so that everyone can be able to bear a small risk. Now, different types of financial products carry varying degree of risk for investors. Risk-averse investors may choose for deposits or bonds or debentures, whereas the risk-taker investors, they can go for equity. Like the different varied nature of instruments are there. Liquidity. The meaning of liquidity is convertibility of an investment into cash. A person has made the investment. He has converted his savings into investment. But later on, at a particular moment of time, he needs the funds. So there should be some mechanism through which easily he can be able to convert his investment into cash. That is called liquidity. And financial institutions will help the people in converting their investment into cash. Simple example in case of mutual fund. If a person has invested the money in mutual fund, in open-ended scheme. In mutual funds, we have different types of schemes, open-ended schemes, closed-ended schemes like that. If a person invests in open-ended scheme, at any time, on any day, he can go to the insurance company or go to the mutual fund company and convert his investment into cash. That is called liquidity. This liquidity is also provided by financial institutions. Next comes innovation. Due to the dynamic nature of the economy, due to the development in technology, due to the expectation of the people, new inventions, new innovations are taking place in the financial sector. Earlier, only few securities are there which are to be purchased by the investors. But nowadays, due to innovations, so many different financial instruments are available according to the need of the investors. So new innovations are taking place with the help of financial institutions. So financial institutions drive the development of financial market by coming up with new ideas and introducing new innovative instruments. And they provide varied kinds of financial services to investors and issuers. So these financial institutions are not only helping the investors, but also these institutions are helping the issuers, the companies. So they have two clients. On one hand, the financial institutions are having the clients of investors, and on the other hand, they have the clients, corporate clients, the companies, issuers. So they are satisfying the needs of both the parties. Next one is education. These financial institutions will play a very important role in educating the people about making the investment. So these financial institutions will educate the people regarding the benefits they will derive from making the investment in capital market. Otherwise, the people will think that investment can be made only in gold or real estate, which is not so productive. But if the investment is channelized for development activity, capital market, then benefits will be more. So in this way, the financial institutions will educate the people regarding the investment in capital market. Next one is support to the economy. Many a times during crisis, the financial institutions will come forward and help the government in providing the finance. So these are some of the functions of financial institutions. So in examination, very frequently they will ask a question regarding what are financial institutions and what are the functions of financial institutions. So if you have watched these videos twice, thrice, definitely many points you can be able to write in your own words regarding the functions of financial institutions. Now lastly, features of financial institutions. What are the features? The first one, they offer relatively higher return to investors. Remember, these financial institutions will help to investors and also to issuers. So by taking the help of these financial institutions, the investors can be able to maximize the return. They will get a higher return if they make use of these financial institutions. Secondly, they reduce the cost of capital for issuers. See here, financial institutions will have two parties. On one hand, investors, on the other hand, issuers. So they will give the services not only to the investors, but also they will give the services to the issuers also. Investors on one hand, issuers on the other hand. So they are helping the investors in maximizing the returns. They are helping the issuers in minimizing the cost of capital. Next, they provide valuable advisory services to retail as well as corporate clients. Since they are very much in touch with financial services, these financial institutions are in a position to give advisory services to both the investors as well as issuers. Then they contribute towards better decision making through a systematic approach and greater understanding of risk as well as return. See here, any investment project, any investment, the decision will be taken by considering the risk and reward. So how to calculate? See, when investment is made now, we expect the return in future. So always the investment is a risky proposition. An investor is not sure that he may get the return or not, whether his funds are safe or not. For this purpose, he must have the knowledge about the calculation of risk and return. So how to calculate the risk and return of investment? That methods can also be provided by the financial institutions. How to take the decisions regarding investment by considering the risk and return. Next, they help issuers to focus on their core business instead of worrying about funding and also dealing with large number of investors. Now see, an issuer requires the funds. If they are worrying about how to procure the funds, they cannot be able to concentrate on their core business activities. So these financial institutions will help the issuer that don't worry about the funds, we will provide the funds to you, you just focus on your core business activities. So in this way, the issuers are free from worrying about from where to get the funds and how to satisfy the large number of investors. Because they are taking the help from financial institutions, the financial institutions are providing the funds and they have to give the return to financial institutions. So instead of catering to large number of investors, the issuers are taking the funds only from financial institutions and they have to give the return to financial institutions. That's the benefit they are getting. Last one, they play a vital role in the development of financial services and overall growth of the country. I already told you many times in the previous videos also, the economic development of a country depends on the development of financial sector. And these financial institutions are the biggest pillar on which the financial system is dependent. So ultimately, these financial institutions will help the financial system and automatically there will be economic development in the country. So in this video, I have explained you about the meaning of the term financial institutions, what are the functions of financial institutions, and what are the features of financial institutions. I wish you all the best for your preparations for your exams. Watch the video not once, but twice, thrice to get the complete command on these subjects. Apart from this subject, I have uploaded so many videos on different subjects like cost accounting, financial accounting, corporate accounting, management accounting, income tax, statistics, computerized accounting, auditing. So many subjects I have uploaded. So visit the playlist, select your subject, enhance your knowledge, get confidence on the subject. And if you are satisfied with my channel, with my videos, share my link, share my channel in your group, in your friend circle, so that more and more students can watch the video and enhance the knowledge. Inshallah, we'll continue the next topic of these financial institutions in the next video.